Hi, this is Keith Payne with Superior Lending.
And I'm Brenda Simmons with Presidio Real Estate.
And we're here with your home buying tip of the week.
So last week we talked a little bit about writing out your offer and different strategies for making your offer strong. This week we want to go a little bit deeper into that and share with you some more strategies and just some things to keep in mind as you're writing out that offer so that you can make your offer the winning bid.
Perfect. So the first thing I'm thinking about is these cash offers, Brenda. I hear a lot of people complaining that I'm being bid or beat out on my bids by people from out of state with cash offers. Is that always going to be the situation or the case?
Actually, no, it's not. And this is a misconception with a lot of buyers that have to get a loan. A cash offer does not always win the bidding war. And that is because a lot of cash buyers are a little bit flighty. Just because they go under contract with one, they might see another one and then pull out and then go with a different home.
Gotcha.
And so because of that, a seller may opt to not go with a cash buyer because they feel like a buyer that is going with the loan is going to be in it for the long run.
More committed, perhaps.
Exactly.
Okay,
Exactly.
Good to know. Yeah, that's challenging.
Now, if you are a cash buyer, the way to make your offer really strong, if you are totally committed to that home, is to make your earnest money go non-refundable or hard soon after the acceptance, or at the very latest by the due diligence deadline.
Okay, so why does making that earnest money hard or non-refundable sooner, how is that going to help?
Well, it really makes your sellers know that you are committed, and again, you're in it for the long haul. You're not going to pull out because you've got skin in the game. And this is for anybody, not just cash buyers, but for any kind of buyer. And again, you need to talk with your loan officer and your real estate agent because you don't have to put all of your earnest money hard at the beginning. You can do part of it hard right at the very beginning, right after acceptance, and then the other part of it go hard later on. So there's lots of different strategies, but do know that if you have some earnest money and you've got some skin in the game early out, then that's going to make your offer super strong.
That's a great signal to the buyer, to the sellers, obviously.
Yes. So remember we talked about earnest money in our last video and how it is part of the entire down payment. So Keith, do you have any suggestions how much of a down payment is good to put in for an offer?
Great question. So this is going to vary. Everyone's situation is different in how much they have on hand to put as a down payment. But typically where you have these bidding wars, sometimes it's advisable to just do the minimum of the down payment. They're going to vary, right, depending on the loan structure you have. So whether you're putting 3% down, 5% down, 20% down, it's going to be different with your assets and how flexible you want to be and be able to bid up. So if you have 20 grand available, maybe putting only the 5% down on the conventional is advisable, so you have some extra capital to bid up if you're really anxious to bid on that or win that home.
That is really, really great advice. And related to that is different loan options. We know that there's all kinds of different kinds of loans. Are there different loans that are more attractive than others to the sellers?
Absolutely. So there is a hierarchy to loans, and conventionals are usually at the top of the heap. They're the ones that the seller's agent and the sellers are going to consider a more viable offer. The credit worthiness of the client is higher. The down payment is obviously higher on a conventional, and unless you're a first-time home buyer, then it's one of the lowest, unless you have a zero down type of loan situation. So those are going to usually trump the other loan scenarios. That doesn't mean you're out of the game if you have an FHA loan or another loan structure. It's just you're not as viewed as viable a solution.
But it also depends on where the home is too, right?
Correct.
Because in like if you're going more rural, then a USDA loan might be the very best option for you, even though you qualify for a conventional, right?
Absolutely. In fact, I spoke to a gentleman yesterday. He qualified for a conventional, an FHA, and a USDA, depending on where he's buying the home. So USDA is great if you don't have a lot of capital and you want to finance the whole loan amount, but your buying power is different for all three of these. So depending on the mortgage insurance and where your credit is, how that mortgage insurance plays out, you're going to have different buying power. So the volume of home you can purchase, or the price of the home you can purchase, is going to vary dramatically between those three different options. So you have to be cognizant of that and really strategize with your loan officer and your agent as to where you're shopping, because you might find a home you really like, but if you don't have the buying power to do it because of the loan structure that you're going to have to use in that specific area, it may not be the best choice for you.
That's such great information. Thank you so much, Keith. Now I've got one more question about loans, because we see on billboards and we hear commercials and all kinds of things like that about the interest rates of loans. And so it feels like loans are sold solely based on the interest rate.
Right.
Is this really the best thing that we need to be looking at?
Absolutely not. I would say that my message today is don't get hung up on the interest rate. Don't hyper focus on the interest rate. Most people I'm dealing with right now are refinancing from a year ago or 2 years ago or 10 years ago to a better rate now. It's unlikely, or highly unlikely, that you will retain your loan in the way it's structured now for eternity. So don't worry about the interest rate so much. Worry about what the cost is going to mean to you in getting the home that you want to get. A slight variation in interest rate might mean closing costs are offset by the lender. Might be less cost to you coming out of pocket. So some variability or some understanding there of what's in your best interest, what's going to cost you the least to get in a loan. And it really depends on whether you're looking for long-term savings or short-term savings, and how anxious you are to get into the home. The best structure is not always based on interest rate, but what's going to meet your needs and your financial situation based on your eligibility, your FICO score, your debt to income, and your down payment. So there's a lot of nuances there that have to be discussed, and it helps once I get into this with clients all the time, with buyers all the time. Just a quarter point difference can really make the home more affordable to them in the short term, even though it's only a quarter point difference higher rate. So that's something to consider, is not worry so much about the interest rate.
That is such good information, and honestly, it's not something that most people think about. So I guess the take-home message of today is communicate with your loan officer and with your real estate agent, because they're both going to help you get the very best option for a particular situation, and it may change.
Right. It will, and it does. You can have a discussion with a loan officer and you're with your agent about a specific home, and then when you're really ready to move, the rate that was quoted will be different a day later or an hour later or a week later. So a good loan officer who you trust is going to try to get you in the lowest possible rate they can in the best scenario that's going to work for you.
We hope this has been helpful for you. If you have any questions, please give us a phone call. Our phone numbers are down here at the bottom of the screen. I'm Brenda Simmons with Presidio Real Estate.
And I'm Keith Payne with Superior Lending. Have a great week.
Bye-bye.